All right. In this video, I am going to cover preparing departmental income statements and contribution reports. All right. I don't think I want to do I want to cover this? Okay, maybe I'll cover it. Okay, so the departmental income is a function first of its sales, department sales. Then we're going to take all the department's direct expenses. Then we are going to allocate or subtract, I should say, all of the allocated indirect expenses. And then I'm finally going to subtract all the allocated service department expenses. And we went through how we allocate the indirect and how we allocate the service expenses in the previous lecture. So in this discussion, we're just going to tie it all together now, right? So the format of the income statement is going to be department sales, and then we're going to subtract department direct expenses. Then we're going to subtract all the allocated indirect expenses, and then we'll subtract all of the service department expenses. Okay? So let's just go through it. First step really is dealing with the direct expenses. And so in our particular example, the company is, I guess it's Outdoor Gal, and we have two divisions. We have three divisions really. We have the service department where we do all the purchasing, okay? And then we have operating expenses by department. So we have hiking and camping. All right. So we are going to really be constructing the hiking and camping income statements. Okay. So in this first example, we have sales of 136,200, and then the hiking department's got 78,000 in operating expenses. And then within the hiking division or department, we have salaries of 14,020, and then depreciation on the equipment 600. Okay. So in this particular slide, or sorry, column, I should say, we're just adding up all of the expenses so far. And so we've got 41,000 in salaries from these three departments. And then we have depreciation of 3,000 from these three departments. And then we have indirect expenses, 12,000 and 4,000, right? So if you think about the facility, we have a store and we're paying $12,000 for the store and rent. And there's three departments in the store. And then we advertise for the store, and there's obviously advertising probably for only two divisions, but we'll find out. Maybe they're advertising for the service department. We'll see. Okay. So let's do next step. Step 2. Okay. So now we are going to allocate the indirect expenses. Okay. And so if I just go back here, here are the indirect expenses. I have 12,000 in rent and 4,000 in advertising. And so we can do the rent first. We're saying, hey, listen, how much of the rent should we allocate to purchasing? How much should we allocate to hiking? And how much should we allocate to camping? And the way that we're going to allocate rent in this particular example is by square feet. And so we're saying the purchasing department takes up 1,800 square feet. The total square footage of the store is 9,000. And therefore the purchasing department takes up 20% of the square feet. So we're going to take 20% of the 12,000 in rent. So 20% times 12,000. That's going to give us 2,400 in allocated costs. Then we can do the same thing for hiking. We're saying, hey, there's 2,700 square feet allocated, or I should say not allocated. the hiking department takes up 2,700 square feet of the store. And therefore, it represents 30% of the total square footage, 2,700 divided by 9,000. And therefore, 30% of 12,000 is 3,600. And then finally, the camping division, that takes up 4,500 square feet of the store, which is 50%. And therefore, we're allocating 50% of the rent to the camping division. And then we're going to do the same thing for advertising. However, we are going to allocate the advertising using a different allocation base. For advertising, we're going to use sales as the allocation base. And so the hiking division had 136,200 in sales, and the camping division had 90,800 in sales, for a total of 22,000. Man, I'm killing myself. 227,000. Now we notice the purchasing department, right? If I go back up to the previous slide, the purchasing department didn't have any sales. And so we aren't allocating any of the advertising expense to the purchasing department because it didn't have any sales. Whoops. I'm circling the wrong. We're not allocating anything. All right. So now we can go back and we could say the hiking division had 136,200 out of total 227,000. That represents 60%. So 60% times the 4,000 in advertising. Now we're saying, hey, you know what? $2,400 of the advertising expense is going to get allocated to the hiking division. Then finally, we have the last bit of information that we need. We have the purchasing department. Okay. The purchasing expenses totaled 19,400. Right. If I go back up to, I know it's getting brutal, but I have 19,400 in purchasing expenses, and I need to allocate those to the various entities. Okay, back to basics. The first thing I want to do is I want to talk about this 19,400 and where that comes from. Okay. So the purchasing department, the first thing I did, or I'm going to do right now, is look at where's the income for the purchasing department, and it's this column. And the first thing that confused me was, what the fuck? There is only 17,000 worth of expenses in the service department. However, in this slide, we're saying there's 19,400. So I was quick to assume that there was a mistake and that we should only be allocating 17,000. However, we had 17,000. I guess am I not allowed to draw over here? Ooh. Let's draw. Draw. What? I can't draw. How am I not allowed to draw? This is crazy. What's going on? What is going on? All right, fine, I won't draw. Okay, so what we're saying is we have total service department expenses of 19,400, but I got confused because when I went over here, it looks like there was only 17,000. So I was like, what the hell? Now, what we did is we said, hey, you know what? We're going to allocate 12,000 in rent to the 3 different departments. So we allocated, hey, I can draw on this slide. I allocated 2,400 in rent. So 17,000 in expenses plus the 2,400 in rent is going to give us the 19,400. And that's this right here. Okay. So now what I'm going to do is I'm going to say, how do I allocate the 19,400 in purchasing costs to the hiking division and the camping division? And the way that we're going to take this 19,400 and allocate it to these two divisions is by using the number of purchase orders. Okay, so 840 orders were done for hiking and 360 were done for camping for a total of 1,200. And therefore, 70% of the purchases were for hiking. Therefore, we're going to allocate 70% of the 19,400 to hiking. And then we'll allocate 30% since there were 30% of all purchase orders related to camping. We'll take 30% of the 19,400 and allocate that to the camping division. Okay. So we're taking it out of the purchasing department and then we're putting it into hiking and camping. And then we can look at the combined profit and loss for the hiking division and the camping division. So we have sales, cost of goods sold, that's all direct expenses. So we have gross profit of 58,200. Then we had salaries for people who specifically only worked in the hiking department. Then we had depreciation probably on the shelving within the store, only related to hiking. Then we allocated indirect expenses for the entire department or the entire store, I should say. And that's when we said, hey, 3,600 of the rent relates to hiking and 6,000 of the rent relates to camping. Then we took all the advertising that we did for the store and we allocated some of it to camping and some of it to the hiking. Then we said, let's take all of the service, the purchasing department, and then let's allocate some to hiking and some to camping. And now we can have income and loss for the hiking division and the camping division. Powerful stuff. In addition, right, now we're going to say, listen, departmental contributions to overhead equals all of the sales minus the direct expenses. Okay? Right? So the overhead was, what was the overhead? It was all the stuff in the purchasing department, etc., etc. Okay? And the rent. And then we're saying the performance measure based on controllable costs, that's only going to be the direct expenses of the hiking and camping division, or the controllable costs.